This is the Equity Management Academy weekly podcast for mean reversion trading for February the 3rd, 2022. In today's financial markets, fear is the common motivator. Summary. The headlines today are related to inflation. Eurozone inflation hit new record highs of 5.1%, putting pressure on central banks to raise rates. The markets are being affected. It is forcing many investors to liquidate their position as a result of margin calls. The markets today are providing some incredible bargains. Fundamentals. Meta, old Facebook, is down about 25%. Amazon is down 6.4%. Facebook is down 25%. We have a massive liquidation, particularly in tech stocks. The tech stock decline is affecting everything across the board, including gold and silver. Gold is down $18 and silver is down 63 cents. These are fast markets to the downside for many assets. The markets today are providing some incredible bargains. We continue to add on the lows to our core long positions in gold, silver, and Bitcoin. The headlines today are related to inflation. Eurozone inflation hit new record highs of 5.1%, putting pressure on central banks to raise rates. The cost of living in Europe is rising fast. A sharp drop to 4.4% was expected. The euro jumped to new highs against the dollar. This will create some hawkish talk from the European Central Bank about inflation. The markets are being affected. It is forcing many investors to liquidate their position as a result of margin calls. In NASDAQ and other markets, this is an incredible fire sale. If you want to get back into tech stocks, this is where you go in and you add to your position. In relation to inflation and hawkish talk, it is all short term. It feels like the peak of the inflationary fears that we currently have. You have to factor in that world debt is at 130% plus of global GDP. Raising rates will only make things worse. On the other hand, they raise rates because of inflation, but on the other hand, governments have to borrow money to pay for their debt at new, higher rates. One is inflationary, the other one is deflationary. If interest rates rise fast, they will cause massive distortion in the yield curve and widespread defaults around the world. It is really a difficult place to be. If you're a central banker, Patrick MontesDeOca, CEO of the Equity Management Academy, said, all they can do is talk and create fear in the markets, which is what they're doing. Do not let this fear prevent you from seeing reality. If interest rates go up sharply, you can see what happens. Even just hawkish talk about raising rates causes major drops in assets. Look at such pullbacks as opportunities to buy. If they do raise rates, they will have to lower rates immediately or create more stimulus, which is chipping away at the purchasing power of the US dollar, euro, or any other currency. Silver. We use the variable changing price momentum indicator, VCPMI, to technically analyze the markets. Silver made a low of 2202. We are at a major blue level according to the VCPMI. For the daily signals, the market is below the buy 2 level, which means it is extremely oversold. The weekly and daily numbers down to 2164 are in a blue area, major support, where inventory should start to come into the market. We should begin to see support and demand. We are oversold in a major area of support, Equity Management Academy CEO Patrick MontesDeOca said. If you're a day trader, you should not have a position right now. You are looking for the price to cross any of the VCPMI pivot points. down to the weekly signal of 2164 or coming back up above 2226. The algorithm in the VCPMI sees that the lower the market goes, the higher the probability the buyers will start to come back into the market. Gold. Gold is similar to silver today. We are in an alert mode, either to come down to 1787, which is the daily number, or it may revert back above 1810, which is the weekly and daily average. By doing so, it activated a bearish price momentum and met the target. Right now, it is in a neutral zone. Already, gold is starting to see some demand come into the market. We recommend continuing to hedge with dust if you have dust. We recommend taking profits at about 2045. The market appears to be fitting the cyclical pattern. We are looking for a rally after a correction down to 1780 or 1800. We are continuing to add to our core long position on these new lows. Gold has hit a buy trigger at 1800. We are buying gold. We are beginning to see the kind of reversion that the VCPMI is predicting, regardless of the news. Cover your shorts and start to look to buy triggers. If you are day trading, the initial targets are 1805, where you can begin to unload some of the profits. The weekly target is 1810. Bitcoin. We are below the weekly average of 36,510. We are in a choppy area. The average price is a 50-50 standard deviation, and we are at the weekly average price and below the daily average price. We got up to 38,765 yesterday. Then we reverted, activating a bearish price momentum. It is now trading around the weekly average. We are now waiting for the market to come down to the daily buy one level and activate a bullish price momentum of 36,516 with a target of 40,163.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.